Good morning, everybody, and welcome to today's morning markets. Just before we go into morning markets, I want to shamelessly plug something, and that is our podcast. So our podcast will be released tomorrow. It's a Q&A special, so a question and answer special. It stars myself. It also stars our CEO, Mr. Daniel Harrison, and it's a chance where your questions will be answered. What you can do is subscribe to our YouTube channel and you'll be able to listen in to that podcast overall. Okay, but let's jump into morning markets. And today's morning markets is really focused around one piece of data. And that piece of data is that the US Federal Reserve, so that's the US equivalent of the Bank of England, so the US Central Bank, raised interest rates by 0.75% yesterday. So the new Fed's fund rate target is 1.5% to 1.75%. So firstly, let's just maybe take a step back from this and thinking, why is the Fed raising rates? It's actually not just the Fed who are raising rates, it's other central banks. It's the Bank of England, the ECB, the European Central Bank are guiding to raising rates before September as well. They're raising rates because inflation is high. It's something that we've all read about. It's something that we all experience as well. In the US, inflation CPI number is at 8.6%. Now that's surprised on the upside, so it negatively surprised when it came out last Friday. And with that, what the Federal Reserve are doing is they're raising interest rates, and they're doing that to cool demand overall. But what are the key takeaways from yesterday's announcement? Really, there's a few things in there. So firstly, 0.75%, it's a big jump. So we've not actually seen an increase of that magnitude since 1994. I think secondly, it was very, very well forecasted. Why was that? It's because there was a soft leak to the Wall Street Journal on Monday night. So previously forecasts were for a 0.5% increase, but then that jumped up to 0.75%. So what else do we know around the announcement itself? Powell has guided that the Fed will continue to raise rates, and actually market pricing for next month is for another 0.75% rise overall. I guess maybe taking again a step back from it and just thinking around, what does this mean for me? What does this mean for my investments? Well, let's look at what happened within markets. And within markets, you saw the main US market rally significantly. So you saw it finishing up 1.5%. You saw the more tech-heavy side of US markets finishing up 2.5%. And there's a reason for that, and that's because within Powell's speech, Powell said that he doesn't expect rate rises of this size to be common, and that's positive for markets overall. And then I guess maybe, what else can we take from this? Quite simply, interest rates are still extremely low. The reality is if you look back over history, interest rates are still incredibly low. Secondly, we're in a rising interest rate environment. You can't have inflation at levels that we have inflation at right now and central banks not act. They need to act to raise rates overall. So for me, we know where we are. We know that interest rates will continue to rise. And from an investor perspective, investors are adjusting to that. So they're adjusting to a different environment. We've seen that in how things have performed or maybe not performed this year overall. And obviously within the true potential portfolio proposition, we and our managers continue to look for opportunities and continue to manage those portfolios in line with that current environment. Okay, thank you very much. And remember to watch the podcast, and I look forward to speaking to you soon. Thank you.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.